And as we like both companies for different reasons, because these are not copycat businesses doing exactly the same thing, even though there is quite a bit of overlap in the EDA portion of their business.
I think this is super exciting, very interesting, and it sounds like if we have another pandemic, Cadence will be ready. This is the kind of technology that is needed to develop drugs quickly and efficiently. Hey everyone, welcome back to Chip Stock Investor / Roadshow. We have just a couple more episodes while we're on the road here, and then we will be back to our regularly scheduled programming next week. Thanks all for sticking with us while we've been traveling, and we have appreciated the feedback. We hope you have continued to watch the channel and are enjoying our shows. Today, we are going to be talking about Cadence Design Systems. They reported just this week, and we're going to discuss that today.
Link to some of our past videos on Cadence and its larger peer Synopsys, ticker symbol SNPS. If you're not sure what these two companies do, very high level, Synopsys, Cadence, and a third company that used to be called Mentor EDA, now owned by the German industrial conglomerate Siemens, ticker symbol SIEGY if you're an investor in the US. These three companies make up an oligopoly called Electronic Design Automation Software, or EDA software. Kasey, you have made the semiconductor industry flowchart, and you notice where this is on the flow. We kind of call EDA software the gateway into the semiconductor industry. Think of it like AutoCAD, but for semiconductors and chip design, circuit board layout, computing system design, etc. Really, really powerful software, really cool stuff. So we're talking about Cadence. Kasey, hit us with the high-level numbers for the third quarter of 2023.
Revenue for Cadence just over $1 billion, up 13% year over year. Operating margin 29%. On an adjusted basis, that operating margin is 41%. Net income, $254 million. Diluted earnings per share, 93 cents. And on an adjusted basis, earnings per share, $1.26. As for the balance sheet, they have $962 million in cash, and debt is $650 million.
Kasey, when we talk about the guidance, you folks will notice there's a bit of volatility in these earnings per share growth rates and quite the discrepancy between GAAP and non-GAAP figures. There's a multitude of reasons why. Some of it is, the easy stuff that you can pick out, like stock-based compensation for employees. Video coming up a little bit later on that, specifically with software companies, stock-based compensation. But another reason why is this company isn't just a software pure play. They also provide some hardware that's used for the verification and emulation of chips. Again, we've talked about this in some of our past videos on Cadence and Synopsys if you want some more details on that. Overall, though, the takeaway here, I think, as you can probably see, another fast and steady quarter of growth for Cadence. This company has been absolutely knocking it out of the park this year, as the semiconductor industry overall has been in quite the slump. Kasey, how about that fourth quarter outlook?
Q4 outlook for Cadence. Revenue is expected to be in the range of $1.039 billion to $1.079 billion. GAAP operating margin, approximately 31%. Non-GAAP operating margin, approximately 42%. GAAP earnings per share in the range of 85 cents to 91 cents. And on an adjusted basis, earnings per share in the range of $1.30 to $1.36. They expect to use approximately $125 million of their cash to repurchase shares in the fourth quarter of 2023.
Okay, so just a little more detail. Kasey, we saw some articles put out by some media companies saying that Cadence's Q4 outlook was indicative of a weak semiconductor industry. That's just silly. So the revenue outlook was actually upgraded, and that's significant because there's only 2 months left to go in the year. So to provide a $10 to $20 million upgrade to your revenue guidance at this point in the year, that's pretty good. And also, by the way, this revenue range, Kasey, is up to 20% year over year growth. And management basically hinted that they have a really good chance of beating this guidance for revenue. In the fourth quarter of the year, Cadence has a renewal pipeline, basically where they renew the contracts with their customers. These tend to be roughly 2-year plus contracts. And as we're going to talk about here in a little bit more, Cadence has been doing a lot in AI, releasing new AI features in their software. And so a lot of their customers are showing great interest in adopting some of these new AI tools to get more efficient in designing chips and designing computing systems. As for some of the earnings per share variability, I hinted at, here's what those implied growth rates are. GAAP earnings per share is expected to be up as much as 3%, but then on an adjusted basis, it's expected to be up as much as 42% year over year. So again, you can see the variability there. In Q3, GAAP earnings per share up 37%. Now it's moderating to 3% expected in Q4. Adjusted EPS up 19% in Q3, now expected to be up over 40%. The takeaway here is this is not necessarily your typical software as a service stock where everything is kind of nice and steady and predictable across the board. Because of Cadence's business, including some hardware sales, some product hardware sales, you get some of that variability. But the overall picture, the company is doing incredibly well in spite of what we think is the worst semiconductor downturn since at least the dot-com bubble.
This is a chart that we have made based on the numbers that Cadence gives in their earnings release each quarter, largely unchanged this entire year. System design and analysis at 13%, IP, intellectual property at 11%, functional verification, which includes emulation and prototyping hardware, 26%, digital IC design and sign-off, 28% of revenue, and then finally, custom IC, integrated circuit design and simulation at 22%.
And a couple of things here before we move on to the main point we wanted to make in this video, Kasey. You see the big chunk, just over a quarter of revenue in functional verification, emulation, and prototyping hardware. That's where a lot of the variability is coming from in Cadence's earnings per share. That's the sale of hardware used to basically sign off and verify a chip before it goes to manufacturing. I just wanted to call that briefly. We'll have more to say about this, as well as the IP, the intellectual property, probably headed into 2024 or in early 2024, because Cadence made a couple of interesting acquisitions that could feed into this business soon.
We're now going to focus on these top two portions of the revenue breakdown in this chart: system design and analysis, as well as custom IC design and simulation. CEO Anirudh Devgan had some really interesting and telling things to say about their molecular sciences division when they acquired OpenEye Scientific. Nick, what did he have to say about that, and why is it important to Cadence Design?
Yes, this is important. I think for Cadence Design, it's important actually if you're also invested in Synopsys like we are. So I think one of the more common questions we get, Kasey, is what is the difference between Synopsys and Cadence? As you may know, we're invested in both. And the reason is we like both companies for different reasons, because these are not copycat businesses doing exactly the same thing, even though there is quite a bit of overlap in the EDA portion of their business. So Synopsys has taken its EDA business and expanded it to include cybersecurity, specifically application level security. Cadence, by contrast, made, as you said, Kasey, this acquisition of a company called OpenEye Scientific last summer 2022. And its molecular simulation, which is used in biotechnology, pharmaceuticals for drug discovery, drug development, and drug optimization. A really kind of seemingly very different route than where Synopsys has taken their EDA core. software business. And so this is a question that has come up. And of course, it came up again on the earnings call. What is Cadence doing with OpenEye Scientific? At what point does this become a bigger, more meaningful part of the business overall? And while the management team didn't give any specifics on financials and how big OpenEye Scientific is now, how big they think it'll be, as you said, Anirudh Devgan gave a nice breakdown of how this business is going to be integrated into Cadence. So Kasey, you have displayed here the reply that Anirudh Devgan gave on the earnings call. Let me just try to summarize it more succinctly. So he compared Cadence's business model to a 3-layer cake. The bottom layer, the base, let's think of it as like the foundation of the business overall. And the foundation for any EDA business, Synopsys included, is the compute layer. So somewhere out there, as with any piece of software, you have to have hardware. You have to have computing hardware that runs the application that customers are using. So that's the bottom layer. Cadence and Synopsys and a lot of other software companies, as you probably know, have been very busy in the last year putting new high-end GPUs, like from NVIDIA, into those data centers to increase the computing power of their software. The bottom layer is already well established at Cadence. There's also a bit of a bottom layer already in existence for OpenEye Scientific when they acquired it. It's called the Orion platform. And it sounds like up to this point, they have kept that base layer at OpenEye mostly intact, but probably some synergies between the two as they merge their computing layer together. But it's really this middle and top layer where we think things get really interesting. So the middle layer is simulation. And to quote Devgan here, the middle layer simulation, which is physics-based and biology-based. So for EDA, for chip design and computing system design, simulation software, it essentially helps speed up the design process, because when you're talking about chips and lots of different parts that go into a computing system, you may have billions of features on an advanced chip these days. And even a large engineering team can't manually design all of those features by hand, manually. Same goes with a chip system, figuring out how to assemble all of those parts onto a circuit boards that goes into a computer. AI simulation is a big part of this. So some of that same simulation software for EDA, for chip design and computing design also can be applied to molecular simulation as well. A lot of overlap there. And then finally, the topmost layer, Devgan calls the AI orchestration layer. So some sort of service that's sold that helps actually automate more and more tasks that an engineering team historically has done. And so that might be using, let's say, an API from ChatGPT, for example, and figuring out how to adapt it for a specific use case for your software. And so, as we mentioned earlier, that's exactly what Cadence has been doing with some of its new AI software features it's been trying to upsell to its existing customers, and that we'll probably see show up in the Q4 2023 earnings. More and more AI automation so that companies trying to design these massively complex chips and now also massively complex molecular designs in the big pharma and biotech space can use to get more efficient, not having to go out and hire more and more and more engineers, but maybe getting more out of their existing engineering teams that they already have. It's very interesting, Kasey. It seems like this is a weird out in left field move from Cadence to get into molecular sciences, but there's actually quite a bit of overlap, it seems, between designing computing systems and designing complex molecules. Some of the same cake, 3-layer cake, can be applied to both.
Yeah, I think this is super exciting, very interesting, and it sounds like if we have another pandemic, Cadence will be ready. I really hope we don't, obviously, but this is the kind of technology that is needed to develop drugs quickly and efficiently in cases like the COVID-19 pandemic.
So Those of you watching or that have been watching for some time probably know that Kasey and I are a fan of finding and investing in the most basic picks and shovels play possible that address very big industries. Our last video, we talked about Intuitive Surgical, a company that we really, really love. But I mentioned in the past, my worst performing stock picks are in the healthcare industry. It is ridiculously hard to pick stocks in healthcare because it's a captive market. Once you get your foot in the door in especially the US healthcare system and get established, you're kind of not going anywhere for a long time. Some of the oldest businesses on the stock market are in the healthcare industry, like that date back to the 1800s, and they're still like very much alive and kicking. So Cadence, it seems a nice picks and shovels play with some exposure in healthcare. We like that.
Let's talk about valuation for Cadence Design. We'll show you a stock chart over the recent year. You can see that it is mostly trended to the right and up. Nick, what are we thinking about for valuation for Cadence Design? Quick break from chip stock investor Kasey, and I wanted to talk to you about Main Street Data. Main Street Data is a data visualization and charting platform that helps investors analyze companies in the stock market. Because the stock market is so complex, it can be very difficult to make informed investment decisions without the right tools. Main Street Data gives you the tools and information you need to make better investment decisions. Main Street Data offers a variety of benefits, including data visualization, charting tools, and company earnings calls transcripts, which are an easy way to reference up-to-date comments from management of your favorite stocks. You can sign up for Main Street Data today and get a special discount through our link below in the description.
Well, if you're starting with valuation on this company, it's going to be basically impossible to justify ever making a purchase. That's a bottoms-up approach. We take a top-down methodology to this, and we think that's important to start with figuring out what the business does, what its strengths are, risks associated with the business first, before looking at the valuation. So that's why we're presenting it always in this order. Kasey, the valuation is high and it's not budging much, even after some in the media have said that the Q4 outlook was a miss and indicative of Cadence's suffering, I guess you could say, because of a weak semiconductor market.
As Nick said, valuation is pretty high. Shares trade for 66 times expected full year earnings per share or 45 times full year expected adjusted earnings per share.
Yeah, and the discrepancy there, again, if you're just looking for a simple way to think about this, adjusted earnings per share tend to more closely follow the free cash flow generation of Cadence. Okay, so Kasey, it's been a while since we've done a reverse discount cash flow model for a company. Let's do an updated one for Cadence. And maybe this will help you think about what to expect. Maybe that'll help you think about how to invest or maybe not invest in Cadence Design stock. Okay, so let's start with GAAP earnings per share, expected to be as much as $3.54 for full year 2023. What's the growth expectation going forward to justify the current stock price, which as of this recording is about $234 per share. So at $3.54, we think the market is expecting something in the ballpark of about 20% average annualized growth over the next 10 years, and then 5% thereafter if you're using 10% discount rate. That gets you to about that $234, $235 per share mark as a fair value to pay now. That is a pretty high bar to clear, I think. 20% per year annual growth for a whole decade. This is a software stock. They've certainly shown their ability over the last decade to generate that kind of growth. But if you continue to expect that going forward, the stock is merely fair valued at this particular juncture. Now, things do change a bit if you're using adjusted earnings per share or even free cash flow per share. On an adjusted basis, Cadence is expecting as much as $5.13 per share. So you can see a a pretty big discrepancy here in the adjusted earnings per share outlook, $5.13. We think the annualized expectation over the next decade actually drops to about 15% per year average annual growth. Again, that's over the next 10 years, and then annual growth after that of about 5% using a discount rate of 10%. That's what gets you to that $234 or $235 price as being fair value. Still a pretty high bar to clear, Kasey, but I think 15% average annualized growth is somewhat reasonable for this company. I'll also mention here too, Kasey, I'm using a pretty high discount rate of 10%. If you reduce that down to 9 or 8 or 7%, suddenly Cadence looks like a much more fair value if you plan on buying and holding for the next 10 years.
That was a lot of information. So let's just break down exactly what we think about this stock at this point. We love the company. We have been shareholders for some time now. We're not betting the rest of our farm on Cadence Design stock, but at this point, I think we would say it's never going to be cheap. And so that makes it a good DCA candidate. Is that a fair statement?
Absolutely. Yeah. If you own it already, like we do, we don't see any imminent reason to go out and buy more of Cadence or Synopsys for that matter. We'll have more updates on it later on this earnings season. If you don't own it, but you want to own Cadence because you see this as a long-term bet on the further development of AI, remember, Cadence and its peers tend to follow the research and development spend of the semiconductor industry. That's a fantastic trend to follow because R&D expense has been steadily rising for, since the semiconductor industry was born 70 some years ago. And then also, if you're looking for a bet on AI kind of proliferating outside of the software and IT segment of the economy, like healthcare for Cadence, we think this is a good long-term investment, but don't go drop a big chunk of your portfolio in it all at once. Dollar cost averaging is important because you're maybe going to be buying shares at a peak, but when it dips at some point, and we do expect it will dip at some point, who knows when that'll happen, you're also picking up some shares on those dips as well. So build a position slowly over time. I guess that's what we're saying. If you think this is going to continue to be a steady and high growth business for some time.
That's what we have today for Cadence Design Systems. Stay tuned. We have a discussion coming up on infinite scalability and are chips the new oil? So make sure you hit the subscribe button and don't miss a video. And we will see you all again at Chip Stock Investor.